You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time, once again, for the option block, our bi-weekly source for all things options related, a little bit of options wit, some wisdom, some what's trading, a whole bunch of unusual activity, a sprinkling, a dash, a dose of your questions, a little bit of peering into the future, and maybe some strategy mixed in there as well. Stir it all up in the pot, and you got the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you're new to the program, first off, welcome. Secondly, you got a whole universe, 14 other shows for you guys to discover over there. The easiest place to get all of that, of course, if you haven't done so already, is wherever you're listening to this. Could be on our website, could be on iTunes, wherever you get it. Make sure you hop on over to the main network feed that gets you all 15 shows, including this fine program. So you will never, I promise you, you will never be wanting for options content if you subscribe to that. You might say, wow, this is too much, dial me back. But that's a problem I don't mind having. But you'll never say to me, you know, there's not enough content on this feed. 15 shows, daily news, volatility views, all that fun stuff. Check it out if you are indeed so inclined and you're listening. So I'm guessing you are. And of course, a nice little fun bonus for you hardcores out there. If you can, join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixler. You guys know the drill. Follow us on the social medias. Head on over to the website. Grab that link. Bookmark it. Set it and forget it. Same link every time for all of our shows. So whenever we go live, just grab that link and you too can join live, ask questions, make fun comments, all of that good stuff. However you listen, of course, make sure you hit us up. Questions, comments, insights. We do love to hear from you guys. And joining me on the program today, got my usual cast of characters plus one. Starting off, let's go out to that scenic, lovely hot spot outside of Chicago where the birds are tweeting. It's always 72 degrees. St. Charles, Illinois, where we are joined by good old Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program. It's been a week. Are you really jonesing for some more Option Block action, sir?
No, I hate weekends because I can't be around the option block that much, and to make me go a whole week, this is just killing me. It's great to be back.
Curse those federal holidays. You know what are they doing, shutting us down? How dare they? How dare they postpone this fine show? We got whole weeks worth of pent up energy to give to you on the show today. Also joining us on the old program today, the greasiest of meatballs himself, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program to you as well.
Hey, good to be here. Glad to be back. Missed Monday's show, but we'll make up for all of the missed show with a doubly awesome show today.
Doubly awesome. Still an hour, listeners, but we're gonna pack in a lot of goodness in that hour. And to help us do just that, we are expanding the all-star panel plus one today. We are also joined by Greg Stevens, the Vice President of Product Development for Options over there at Fidelity. Greg, welcome to the Option Block.
Hey, thanks, Mark. Happy to be here. Looking forward to the show, and it sounds like we've got quite a bit to talk about today.
We do have a lot to talk about, but before we get to that, really quickly, I know you hit on one of our interview shows a few months ago here on the network, but maybe some of our listeners didn't hear that. So really quickly, give our overviews a quick overview of your background in the option space and what it is that you do day to day over there at Fidelity.
Yeah, Mark, sure. Way back when, I actually started as a rep on the phone with Charles Schwab many moons ago. ended up at the Chicago Board Options Exchange for a few years, and then finally made my way over to Fidelity Investments on a few different roles, but currently in product development, helping drive direction, new products, innovations, and listening to what our customers have to say for what they want to see on our platforms.
All right, sounds good. With the gang all assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was catching our eye in today's market activity, or perhaps more aptly today, lack thereof. No, it's funny. If you look at the screens today, you might just think nothing's amiss in the world. All is fine and dandy. It's not a thing to drive us north or a thing to really drive us south. We're kind of just unched because that's where pretty much most of the major indices, particularly if you came at the end of the day, that's where they all ended up. So you never know. There's all these things brewing internationally and domestically and elsewhere because everything is just hunky-dory and kind of just when you're looking at the markets. Like we said, most of the major indices pretty much unched on the day. The Q slightly north, the Dow slightly off. S&P, that Goldilocks right there in the middle, almost literally unched on the day. And VIX Cash also taking a bit of a break today as well, pretty much unched as well. Still north of that 11 handle, actually right about 1170 or so here. So not quite single digits, but not quite 15 and above either. It's kind of in that tween zone or flirting with it right there. And Greg, since you're our guest, we'll let you kick it off here, give you pride of place. What caught your eye in today's somewhat tepid activity?
Yeah, I mean, I think there are a couple of things all, related to what's going on, primarily with the weather, Mark. And I think we've seen, the financial sector, I thought was interesting today, pulling back on some of the yield concerns, that are out there, that flight to, that flight to some safety, it looked like. But, what really caught my eye in the financial sector was in Fidelity's top buys and sells, from our customers. We've seen folks jumping into almost a 3-to-1 on a 3-to-1 basis, placing buy orders over sells for Bank of America. Actually, it looks like they were doing a little bargain shopping today. And the second one was, Home Depot. There was a story out today, and along those same lines that, with some of the unfortunate weather activities we've had, that they've seen a little bit of a run-up in activity as well. So I think those two things, were of interest today, just seeing where, people were looking for opportunities. And as you, quite, well put it, in a very tepid, unchanged, dramatically unchanged environment, right?
Yeah, you never know by looking at the screens today that we have literally a cannon loaded full of hurricanes in the Atlantic that's just pointing at the coast and is just launching one after the other. We had Harvey and then Irma, I believe now Jose. I think there's another one even behind that. So we literally have this just endless procession of hurricanes, each one more powerful perhaps than the last. And yeah, you never know by looking at the screens today. Mr. Meatball, what else caught your eye in today's perhaps surprisingly quiet affair?
Yeah, it was interesting. It looked like it started to melt down a little bit this morning, and then that got bought. I would note that we have the rare VIX down, S&P down, and when you see that combo, that almost always means that a rally ho is coming. We VIX on its own really doesn't tell you a lot. S&P movement really doesn't tell you a lot. I'm not a believer that just because the S&P was down one day, it'll be down the next, or if it was up the next one day, it'll be up the next. The S&P is generally up more than it's down, so that's just the way it is. But, when we see VIX down and S&P down, that usually means there's some complacency, that there was, some insurance hedging or selling around a moderate sell-off in the S&P. Tells me that, maybe some of this wall of worry is starting to deteriorate, and things are going to calm down. I would also note that, last week we commented on the fact that the spread between VIX futures and the VIX itself was incredibly wide. That has tightened significantly down from about $2.60 on last Thursday to $1.30 today. Now, $1.30 with, how many days until VIX expiration? 8 trading days. $1.30 is still super, super wide. That should be more like 70, 80 cents now. But the fact that that's tightened, along with the S&P down and VIX down, maybe tells me that we're lining up for a potential, maybe a little run back to 24.75, 24.80, and we may see vol renormalize back to the 10 to 11 range. It kind of feels that way. Some interesting in the sectors. Goldman, J.P. Morgan this morning absolutely thrashed. Goldman was down as much as 4%, ended the day down 3%. J.P. Morgan similar, and then the other major name. These are the reason the Dow is down is because of these three names: J.P. Morgan, Goldman getting murdered, and then you had Disney just get smoked. They talked about the streaming service. They led with the streaming service and then tried to bury the whole, and we're revising our earnings down and revenue expectations down. But, it feels like we're set for a dip in volatility.
Yeah, Disney taking it on the chin, Goldman taking it on the chin. A lot of interesting names, maybe not the ones you'd expect with, like I said, this hurricane cannon loaded and pointed at us from the Atlantic to see Disney getting slapped. But c'est la vie, weirder things have happened. You're right, they kind of use that streaming service to bury perhaps a lot of other things. I think we had a listener comment about that and about the fate of Netflix with all these streaming services. We'll get to that a little bit later in the mail block. But first, wrapping us up here before we get into some other topics, Mr. Uncle Mike, what caught your eye, sir, in today's just maelstrom, pun intended, of activity?
Well, there really was a lot. It was a very exciting day with which did not move the market, ironically. Just to kind of add to what Greg and Mark said, we had XLF down because of the financials, like what Mark had talked about. And with Disney, the thing that I like about that right now, if you want Disney for a long-term holding, if that's one that you believe is going to be there for generations and generations to come, now might not be a bad time to start selling some puts to get into it, if that's something with which you're looking to do. But the other thing that caught my eye today is silver. That's been kind of creeping up a little bit recently in that, you could make an argument for a lot of different things as to why it is, but combine that with oil coming up a little bit recently, with silver coming up like it has, that's kind of one where a lot of times when, and I'm doing the air quotes right now, when bad stuff happens, a lot of times people flock to commodities, in particular the precious metals. Just looking at silver today, it's up over 1% on the day, and it's been having a lot of movement lately. Gold, GLD with similar movement, so we're getting a little bit of a rush to the commodities right now, which is, I guess, to be expected when you have, as you put it, the barrel of hurricanes headed our way in the Atlantic.
Yeah, is that? You think that what's driving bonds? Has the economy changed that much that bonds should be screening the way they are? Is it North Korea? Is it the debt ceiling's been punted? You would have thought bonds would have sold off. What is I'll toss this out. I don't know, Greg or Mike. What is going on with bonds? Why are rates? Why are short-term rates 50 basis points, potentially 75 basis points, and the 10-year is threatening 2% again? Is it the ECB? There's so many different things on the table in the bond market. When rates are this low, markets tend to rally, but this has this feel of weirdness, not funness to it. I'm not sure what is going on.
Greg, you got any thoughts on weirdness versus funness in the bond market?
Well, less about the bond market, but a correlation to that. I mean, it seems that that some of our our concerns, whether it's North Korea, the economy, the administration, have been allayed a little bit. But if you look at the SPX, the options market itself, I mean, we're looking at 2-to-1 puts to calls. I think that there's still a lot of uncertainty, within and concern within the investor base, which could be a flight to quality, right? I mean, trying to avoid a pullback on the unexpected, because that's really what we've had so far. Within August, with North Korea, with Barcelona. I mean, there's been several things that just pop up, and potentially, maybe it is still a little bit of uncertainty out there. that's creeping in and causing those rates and to stay low.
Uncle Mike, weirdness versus funness. Where do you fall in the great bonds debate of 2017?
In the great bonds debate of 2017, I'm going to go on the weirdness side of it. I guess it's funness if you're long bonds right now, but I think it's weirdness because of the fact that we do have a rally going in the S&P over the course of the last few months. Obviously not the last month and a half, but just in the longer term this year we do. Bonds have rallied over the course of since basically March, and I guess if you want to go a little bit further back since the beginning of the year, not a ton, but they have rallied along those lines. But you combine that with the low rates, with the ECB looking to stop the bond buying program, with North Korea, with a lot of different things. I personally think it's weirdness. We've talked about on the show a lot because of the fact that even though if you'd have had these headlines, and I've said it before on the show, in the Clinton administration, in the Obama administration, it seems like every day Trump's getting impeached. And whether or not it's true or not, whatever the case may be, if we'd have had these headlines years ago, we'd have had a lot more. We would not be having single-digit volatility.
No.
At all. So I am on the definite 10,000% weirdness side of this debate.
Yeah, and I was just thinking, I'm wondering when I'm going to get a call from my mortgage broker to refi again, because I'm in at right around 3.5% on a 30-year with the 10-year at 2%. We're going to start approaching some of those lows. You're going to see housing refis. You can see a lot of home equity lines being pulled. There's a potential. I'll tell you right now, I currently feel weirdness, but I see potential funness.
I always leave it to you, sir, to coin some good phrases here on the old show. Technical terms only, of course. Moving on to some other things that are lighting it up. It's, of course, our first show since the month kicked off here. And the numbers are in from our friends over there at OCC. And August is usually a time of year where I don't really like to look at the numbers because there's usually not a heck of a lot going on. August, pretty seasonally, usually a quiet period. Everyone's off in the south of France or in the Hamptons, and not a lot of people playing in the option space over the course of August. And boy, was this August different. Friends over there at OCC saying their overall options volume up 18% in August compared till this time last year in 2017. Exchange listed overall volume reaching almost 381 million contracts in August, again up 18% from 322 million this time last year. Year to date, and after all the hand-wringing at the beginning of the year and even at the recent options industry conference a few months ago, all the hand-wringing about where's the volume going to come from, are we in another downturn? So far, year-to-date volume over there at OCC up 3% to 16.5 million contracts. You break those numbers down a little bit further, get into the equity options. I know a lot of you guys like to sling 329 million contracts. That's a 14% increase from August of 2016. Break it down a little further, go into the ETFs, 153 million of those bad boys, a 27% increase from this time last year. And index options getting a little bit further down the rabbit hole. They're up a whopping 54% to 51, almost 52 million contracts. Also worth noting, cleared futures is setting a record there, nearly 15 million contracts in August. That's up 71%. Why is that interesting? Well, lion's share of that, I think 99% or somewhere, is VIX futures. So VIX also lighting it up this past month. So really interesting, maybe surprising stuff. I know, Greg, you and I were chatting down at the options industry conference a few months ago. I think that was mid-May, and it seemed like the conversation then was really, what a terrible year it's going to be. What can we do to really turn around this Titanic? Oh, woe is us. Where's the volume going to come from, et cetera, and so on and so forth. Not a lot of positivity really coming out of that conference. And here we are now, August, kind of setting records. Does this surprise you? And also, especially given what we heard at the conference and other people in the industry for the last few months. And then also, B, are you seeing similar numbers over there at Fidelity?
Yeah, I think, from a surprise perspective, I'll err on the side of just a little bit. I don't know that I thought that this rally would be as long as it's been, or be as big as it's been, I suppose. And when we were at that options industry conference, a lot of discussions were around the core group of stocks that were really driving the industry, and how do we and how do we engage in some of those less liquid stocks, getting volume in there. And I think that the bull market took care of that for us, right? So those stocks that were on the periphery are probably getting, and just my guess on this, are starting to see some volume out there, seeing, the rising tide lifts all ships. So a little bit of a surprise, I think, with what we've been seeing. But, then again, I look at that index volume up 54%. I see, ETF volume, doing, really well, as well. And, I think it goes back again. I mean, for August, we had a lot of, different things that were driving the market, up, down, and then, as we've seen some day-to-day movements that weren't, quite as large. So, little surprise, I would say, but definitely with what's been going on lately, volumes seem to warrant where they're at. As far as Fidelity goes, I think that, like I said, rising tide lifts all ships. I think if you ask any of our competitors out there, everybody's seen seen a rise in volume as our investors, customers, and just in general, people want to be involved, with the market where it's at. So. I'm hoping that the VIX down, SPX down means that we're still going to rally a bit more. I like that idea, but yeah, I think that I would err a little bit on the surprise here.
I would say that the financial industry, led by the SIBO, should create a huge PAC to reelect Donald Trump, because every time that man opens his mouth, 10,000 VIX futures trade. It's incredible. Has any single man who's allegedly pro bull markets ever created so much volatility and so much volume? He is God's gift to trading volumes. He is literally like a one-man algo launcher.
Yeah, but you're right. This has been obviously you're starting from a low baseline when we're talking August to begin with. So any bump is going to seem, comparatively huge. But still, how often have we've been doing this network for over a decade now, and I can't recall another August where we had this much to talk about, let alone this much volume going up, this many numbers. Even with VIX still relatively anemic, it still didn't matter. Still putting numbers up across the board, even in VIX. VIX cash is nothing. VIX futures printing like mad. So it's been a fascinating time to watch. And August, certainly, if this continues, if we can keep this pace for the rest of the year, this will be maybe we'll finally shake off the curse of the last few years, where the overall options volume, the overall industry as a whole, has been kind of maybe sluggish, plateaued. Hopefully not cresting the wave, maybe coming up the other side of it again. So hopefully this is the trend. We can keep going. We'll see if September can deliver as well, and see if we can deliver, because it's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know what that funky tune means. It's time for the funky part of the show. Greg, we didn't warn you have to wear your fedora during this part of the show, even though it is radio, because we're going to the dark side. We're going down the dark alleys of the options market, going to spot the weird, the wild, the whimsical, the unusual, the head-scratching paper that was lighting it up. I don't know if you've been listening to the show lately, Greg. Maybe we like to kick it off here because people keep asking us about them, so we'll keep telling them about them. We discovered a few months ago. Actually, let me play a little quick game with you, if you don't mind. You're the guest. You're in the hot seat, so you get to have some questions thrown at you. Greg, if you had to guess right now, if you had, know how hot Tesla is out there, you probably looked at the notes, or maybe you're cheating. But let's say you didn't look at the notes. If you had to guess right now, what is the number one with the bullet options position from an open interest perspective right now in Tesla out there?
Number one for Tesla, the 400 calls.
See, that's a reasonable suggestion, a reasonable answer. Any reasonable person probably would have said something like that. Near term, front month, probably upside, maybe some downside. No, it actually is the January, not even 2018, 2019, 50 strike puts. So put that in your pipe and smoke it. We discovered that a few months ago here on the show, and we've kind of been, people have been inundating us with questions about this. So I like to give them a little update every now and then. Today was actually relatively quiet, and the funny thing is, Greg, these puts have been printing pretty much day in, day out, hundreds of contracts a day. Today is actually a quiet one, only 27 contracts going up. So these, call them what you will, catastrophe. I heard some people suggest it's Elon Musk life insurance policy, critical man policy, hedge, whatever you want to call it. Only printing 27 contracts today, a mere 27 contracts, but open interest at new records, over 29,000 out there on that strike. So all you guys keep asking us, yes, they are still trading a little bit quieter today, not 300 or 400, just 27, but still up over 29,000. So open interest growing up there. Let's get on to some of the real action that caught our eye today. Starting off, let's go out to an ADR. This is Himax Technologies, Inc., ticker symbol HIMX. This is our resident cheapie for the day, closing today $10.11. Not a good day for Himax, off about $1 or nearly 9%. This is the name that does on a given day decent paper, about 7,500 contracts, about 40,000 going up today. And of that, what we saw was, again, talking about January and Jan 2019. We're keeping that theme alive, but we're going a little bit different this time. We're going all the way out to the upside, and we're going to the 12 calls, Jan 2019 12 calls, starting off the day with someone really wanted these and lifting up, pretty much lifting the offer on nearly 5,000 of these bad boys, doing it for $2.40, a total on the day of about 5,600 or so. Looks like a few hundred more piling in there towards the end of the day. Now, there is size open interest on the strike, about 17,000, so there is a potential for some closing action here. And again, they are aggressively lifting that offer here, so it does look like perhaps there were opening, didn't have a chance, we didn't see any stock going up with this bad boy, but we'll do a little bit more. We'll do a little bit more digging a little bit later here. Looking back on the chart here for the past year or so, Himax has kind of been in an interesting range. It's been down as low as $5 and then up all the way to nearly $12 just a few sessions ago, actually. This was back on, yesterday, the 6th. It was trading $11.97. Low and hold today, it's trading about $10, so off nearly $2. So it's been quite a wild ride for Himax over there. In case you're wondering what this name does, they are a fabless semi provider. So there you go, a little bit integrated circuits, all that fun stuff. Obviously, a lot of volatility out in that space of late. So, Mr. Meatball, perhaps we'll start with you. What's your take here on someone looks like pretty much aggressively picking up a nice chunk of? I mean, these calls were almost in the money just a day ago. So, what's your take here on this high flying action here in Himax?
Yeah, it looks just like a reversal trade. When I do that a lot. I mean, generally I do that more in like stuff like the S&P 500, but why not Himax? I mean, who doesn't love a cheapy stock for a big reversal? But yeah, that actually is a great strategy. This stock was this much yesterday, and I can buy these calls for next to nothing. Why wouldn't I set up a reversal? Why? I mean, give me one good reason other than the fact the stock is down a lot.
I would say the stock is down a lot. The stock is down a lot would be my number one reason. Outside of that, yeah. But you have others perhaps. I don't know. Outside of that big one, there are others. But Greg, any thoughts here on why someone, or maybe you like this trade? I don't know. You like this high flying Himax? You seen any action over there in Fidelity on this one?
Nothing really to add on this one. I mean, it's very interesting volume. I've seen when you sent out the notes earlier, I looked at it just for a few minutes, and somebody definitely. I mean, if you look at the 7, 10s, and 12s, I mean, it's got some pretty sizable open interest, in those as well. So seems somebody's got a fairly bullish bet, going out there on these positions.
Does seem to be the case. We'll see if that's still the case for our next name. It's a big block day here on the odd block. Moving out to EWJ. This is, of course, the iShares MSCI Japan ETF. Say that 5 times fast. Closing today, $54.80, up about a third of a buck, or right around almost little more than 0.5% out there. This is the name that does about 5,300 contracts a day. Today, doing a little more than that, doing 46,000 and change, 376.5 to 1 puts over calls out there. Yes, 46,312 were puts, only 123 were calls. So clearly we're going to look at the calls today. Nope, we're looking at the puts, and it was effectively of that 46,000 in the puts, 40,000 of them came in this one massive print here early in the session. Jan, all the rage out here in Jan today as well. Everybody's got Jan on the brain apparently today. And someone came in early in the session today and said, you know what? I want to get myself some of these Jan 35 puts. Yes, 35. So the stock closing today, nearly $55. So these are about $20 out of the money. Jan 2018, not 2019. So he's not super crazy. He's just going out to Jan 2018 and all the way out to the 35 puts. Decided to pick up 40,000 of those bad boys, just devouring that 4-cent offer. No open interest to speak of. Even if there was, there's not going to be enough to cover this. So clearly this is an opening print out here. Interesting stuff. This is indeed a long holder, then hedging something, then he's picking interesting strike, interesting time frame to do so if he's got some other axe to grind here. Also interesting, speaking of axes to grind, let's see what's been going on out here in EWJ over the better part of the last year. And the last 3 months have been kind of relatively stable. It's been kind of an interesting year overall here for good old EWJ, with trading pretty much about a year ago, not that far from where it is now, about $49.50, and it's kind of been slowly, inexorably on the rise here to about 55. So about a 5-handle range over the better part, most of that to the upside here, or the better part of the last year. Perhaps someone deciding, he wants to protect not so much those $5, but maybe 20 handles below that. Mr. Meatball, you're out there slinging a lot of puts in Carmen line these days. What would possess you? What spirit would possess you think, to come in on a name and pick up 40,000 puts, 20 handles below the money?
I actually used to trade EWJ when I was a market maker, believe it or not.
I don't believe it. I choose not to believe it.
A decade ago at this point. And we saw this kind of paper all the time. One of the things about EWJ is that it's not currency hedged. So there could be a scenario where the Nikkei drops and the yen gets really, I want to say weak against the dollar, and this thing just turns into complete garbage. So I would be less than shocked if this was kind of a black swan hedger defending against. I mean, we saw a missile actually fly over Japan. What happens to the Nikkei and the yen if North Korea actually decides to be stupid? It seems like it's a and let's not forget, a few years ago, the EWJ was what, 2017. I think I remember when this was like 10. So somebody's probably been in for a long time, and they've set up a line in the sand. It also could be a hedger against some sort of Japanese bonds, something along those lines, some sort of debt hedge. A lot of times these deeply out of the money calls or out of the money puts are actually hedges on debt. But my gut is that this is a Kim Jong-un EWJ trade. That would be my guess.
Kim Jong-un EWJ. Yeah, you're right. They did have missiles coming over their land or very close to it not too long ago, and there's all this talk of hydrogen bombs. So forget about the cannon in the Atlantic. We got literal cannons launching missiles out there in thing. By the way, our friend the Flowmaster floating around the chat yet again, bringing some knowledge here. He's saying EWJ. He says he's looking into ISE. It shows it. Could it be a seller actually? So interesting. That's why when you see these weird prints and you see them going up, kind of just huge block, one price, it is a little bit kind of open to interpretation exactly what the heck there's going on out there. So we love the Flow Master. I have to get him on the show again one of these days. He's always bringing knowledge over there. If you haven't done so, listeners, head on over to Trade Alert or Option Alert and check out his fine services over there. Moving on, one last bad boy. This is going to be actually a review here of XLU, some paper we highlighted back on the show back on August 17th. If you remember, at the time, we had our friend, the Tub Master, on as well, and we were talking about this upside call frenzy in XLU. This is, of course, the Utilities SPDR ETF. Closing today, $55.10, up nearly 1% of the day. At the time, we were talking about this just palooza of a set 57 calls. Someone just had to get these bad boys. They traded over 81,000 that day, right around or near the offer. They added about 80,000 more about 12 days later on the 29th. So total of around $1.60 were gobbled up on that strike for prices around the first block were about 5 cents, and I think the latter kind were in a similar range. And fast forward, a few weeks or so now, we're here on September 7th as the show is going out live. So these bad boys are coming up on expiration a few more weeks here, and looking at the set 57s, and lo and behold, still about $1.55 open on that strike. So our friend out there still holding on to the dream, whatever that dream may be. Unfortunately for him, at least the option side of his position, usually you see something like this, you probably got some other axe to grind. Maybe he's mega short or something else out there in the underlying. Usually these nickel calls are not apropos of nothing. But at least from our perspective here, the option side, not looking so great. They're pretty much offered today. Actually, they went offered at a penny. So he can buy all he wants more for a penny. If you love them at a nickel, gotta love them at a whopping penny. So our friends wearing a little bit, well over 300K now on these calls. Again, he's probably got something else against it, so perhaps not sweating that too much. Let's see, back when we profiled this name on the 17th, the stock was trading right around 50, not about a little bit shy of where it is now, about 54.5. So it's up about 60 odd cents net since then. It had spiked up at a little bit higher, it's up 55 and change still, so a little bit north of where it is now. It's kind of been in this range ever since. So our friend, obviously, if you're looking to load up on these calls, you need some aggressive upside move, and you need it pretty quick. And our friend, at least so far, has not received that. Looking back at the year that's been out here in XLU, like we said, has kind of drifted lower, got to the low end of its range back in November of last year, trading around the 45 handle or so, and getting up as high, as we said, about 55 and a quarter, just about a week or so ago. So this thing is kind of floating around the upper end of its range, but so far, unfortunately, at least for the option side of what our friend has going on, hasn't really threatened that 57 handle. Mr. Meatball, take us home, sir. What are your thoughts here on this call palooza, I should say? At least so far, not working out, but probably this guy's got another axe to grind, would you say?
Yeah, I mean, well, if you take a look at the chart at XLU, it's been pretty much straight up. So I don't know. Maybe the guy thinks that we've got another $2 in a utility ETF would be incredible, but who knows? Maybe if there's a serious shift in the interest rate forecast. All right, so let's say that all of a sudden the consensus is Fed's not raising rates again until next September. Where does the XLU go, Mike or Greg? What do you think? If that's the case, you'll get a huge shot up though in XLU, and maybe these are worth something, but. Again, maybe it's a big short. Maybe it's interest rates can't keep going this way, so I'm going to short utilities instead of bonds. I don't know why you do that, but maybe that's what they're doing. But it's an interesting thought. What if the interest rate forecast changes and all of a sudden we're not getting a rate hike until next June or next September?
Then you're definitely refinancing, I would say, at the very least. Our friend here.
Well, that's true. That's very true.
I don't know, Greg, any thoughts here on either this paper here in good old XLU, or perhaps maybe something else you noticed on the old Fidelity platform today that caught your eye?
Yeah, I mean, it was from our perspective, I mean, I think it was pretty slow. I didn't really notice anything come up today, but on the XLU side, I think it was well put. I mean, it seems like there's potentially something else on the other side to get a move, in the utility ETF in the next week or so probably would be pretty significant. So, our friend here hopefully does have, some other axe to grind, as you say.
Yeah, let's hope that axe is nice and sharp and it's doing pretty well for us. Speaking of which, our friend over there still listening in the chat, the Flow Master, Mr. Henry Schwartz, also chiming in about the HIMAX call, says he noticed about 11,000 going up yesterday. So paper today, that 4,500, 4,700 or so was actually adding on to 11,000 yesterday. So someone's loving themselves, those calls out there in HIMAX. Good stuff. It's Thursday. Usually this is where we welcome on Uncle Mike to do a little strategy block, but we had no show on Monday, so we didn't get a chance to answer your questions. So I'm going to do that now with a little fun Thursday edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where you guys take the reins, questions, comments, insights. You know how to reach out to us, I should say, and hit us up with all those insights. You can do it live like the Flowmaster does if you're in the hardcore crew there. Let's pay off some stuff we asked you guys last week. A lot of you guys wanted to chime in on our cheapy lottery ticket poll question we asked you last week. If you had to buy a lottery ticket, so effectively Deese calls for a nickel in one of these names, which one would you choose? And you guys asked, so we did the math for you. We said the VIX D70s, the Apple Deese 235s, the Amazon Deese somewhere around 1420, probably a little bit higher, but they don't go that high. And then the Tesla Deese 610s. And an overwhelming near majority of you, almost half, 40%, saying VIX. VIX getting your call. 24% Amazon surging towards the end there. Only 20% for Apple and a whopping only 16% for Tesla. No love for Tesla. So the Tesla bulls not coming out in force, whereas the VIX bulls doing so hard today. And this week we asked you guys Q4, kind of a similar frame but a different take on it. We said Q4 is looming. So looking towards the end of the year for volatility, where are you placing your bullish volatility bets? Which of these four has the most upside by the end of 2017? So you want to buy yourself some gold volatility? You want to buy crude volatility? Crude's been moving a little bit of late thanks to all this hurricane cannon. The S&P volatility, a.k.a. our old friend the VIX. Or are you looking at some single names like an Amazon or something else? Greg, you're our guest, so you get pride of place. Perhaps it's a dubious honor on this one. What would your vote be? And then also, what do you think our audience is voting for?
Well, I think that it's probably not going to change much from last week's response. I think the VIX is probably the place to be with this question, and where they'll be as well. 2 votes for the VIX here, huh? Mr. Meatball, I got a feeling I know where you're going to come on this one, but we'll see. Maybe you're changing it up. Maybe you like some gold vol. What are you feeling here?
I don't like gold vol. I just don't. If just a small diatribe, has any allegedly safe haven asset been proven to be a false safe haven asset more than gold over the last couple of years? It's done nothing in every single major sell-off. I'm with Greg. I'm with the VIX. I am the Mr. VIX to Russell's Dr. VIX, so of course I'm with the VIX.
I often refer to you sometimes as Senorita VIX, but to each their own. And last but not least, Mr. Uncle Mike. I got a feeling I know where you're going on this one too, but sometimes you surprise me. What are you feeling out here for your vol pick for the end of the year?
Buy me the T-shirt with the arrow on it. I'm with VIX. Point it to Mark and Greg.
Wow, VIX love across the board. So far, that's pretty much where our audience is as well. About a third. It's still early days here. We still got a few days left on this one. But so far about a third coming in for the VIX. Close number 2, 24% coming in the gold vol. So they're eschewing Mark's hatred of all things gold vol. 22%, only 22% saying the single names like the Amazons, the Teslas. That's not lighting them up. And 21%, still pretty close on the bottom tier there. 21% for crude vol. Crude needs something to really juice it up and keep it there. So I don't know if I'd be loading up on crude vol, but interesting choice there as well. Before we get some other questions, I know, Mark, you actually want to turn the tables on our guest here. You got a question for Greg, sir.
Yeah, during the discussion on volume and all the big increase in August, I was kind of wondering, with the addition of all these weekly options and now daily options in SPX and SPY, have you found does Fidelity help their clients kind of find what is the right duration for their trade? And given all of these different options, I'm a client and I say, I'd like to buy calls on XYZ. What is the process for picking when to do it? Do you guys mostly just stick to monthly options? Do your clients say, no, I only want to trade weeklies? How have you guys dealt over the last couple of years with the fragmentation and really delineation of all these different strikes and months and expirations?
Well, I tell you what, it's a good question and one our customers come up with all the time. I mean, you look at an option chain now, and especially if you're looking at the SPX, the VIX, the SPYs, Apple, Google. I mean, where do you go? Which expiration's right for you? And that's a lot of the discussion that we have with our customers when it comes to trading options. It's what's your forecast for the underlying stock? You have to start there. Where are you comfortable with saying that your forecast for this stock is going to see it through, or where you might want to do a reassessment? Never start with the option first. Start with the stock. What do you believe the stock is doing? Where do you what are you trying to accomplish? And then we can work our way into the option strategy itself. And so it starts there, but every conversation we have with our customers, monthlies are good for some, weeklies are good for others. And I mean, obviously, as you guys know, and as the OCC likes to let us know as well, that the weeklies, I mean, there's been they've just grown tremendously. They took a little while to get started up, but it gives us a little bit more, gives us some choices, right? Especially around earnings, especially around different types of events that maybe we didn't have in the past, where there were only monthlies, and you had either 30 or 60-day option, and then if you wanted something beyond that, you really had to start looking at 90 to it's 90 days to 6 months out there. But when we're talking about this, we start with the forecast for the underlying stock. Everything is driven off that. And then, we talk about, the pros and cons of, do you want to sell a cover call on your Apple, leading into, what is it, September 12th, that they're looking to have their product announcements? Do you want to be in front of that, or do you want to be behind it? What's your take on how it's going to be received? And so once we start to get into, once we start to answer those questions, the expirations, start to, really show themselves as to what, what's best, for the individual situation. So, long-winded answer, I think, to your question, but it really does start with the forecast, whether you're looking at fundamentals, technicals, or you're a little more event-driven.
It makes a lot of sense. So you're asking the client, well, what do you think and why and when? And then you build the option strategy around it, is basically kind of what you said. And that makes sense. I don't think a lot of people do that, but it's good that Fidelity is making that step. So I was just kind of interested, because it's a question that I'm constantly wondering about.
I mean, one of the questions that we follow up with that when we're talking with investors about, as a 360 view into their trading plan, is they all have a pretty good idea of what they want to do when they get into it, but it's that exit strategy as well. And so, just talking about, bringing it full circle, we really have that full, conversation with them to say, all right, well, now that you've gotten into the strategy, now that you've told us what you want to do, well, what does success look like? And then, what does not going down with the ship, look like as well, right? Because, if we were all right 100% of the time, this would be an easy game. We probably wouldn't be on the call, talking about it, but we're not. And so, we try to bring it full circle when we're really talking about this, to not only include how we get in, but also how we exit, because we're not right 100% of the time, and we just have to manage it. Hopefully our losers are smaller than our winners, and we can keep moving forward that way.
It is nice to have more options, pun intended, these days with the weeklies and effectively someday soon dailies. You have quite a nice menu now to choose from when you're coming in as an active retail guy on a Fidelity or some of these other platforms, and being able to choose. Hey, I want to just get a week. I want to just get a day, or I want to get 3 months. You have those choices. All right, coming up next here, we got time for a few more. We got this one comes from this mouthful of a handle, EJH4IZU. Say that 5 times fast. He says, I have a question for the option block. What happens to puts I'm holding if the company files bankruptcy or becomes insolvent? Am I just out of luck? Well, no, EJH4IZU. You are very much in luck. You are a happy camper because your stock's going to zero. Uncle Mike, walk our friend here, the unpronounceable EJH4IZU. Walk him through what happens when he buys these puts and he hits the lottery.
Well, step one, smile. That's the first rule of business on this. What happens with this, remember, when you own a put, you own the right but not the obligation to exercise the option at the given strike price. So if you own that put option, if possible, before the bankruptcy happens, you're probably better off just selling it on the open market. But let's just say it's bankrupt and then the option just stops trading. In theory. Now, that's probably not what's going to happen, but let's just say in theory it does. Remember, there's someone on the other side of that trade with which you can sell this to, or I'm sorry, with which you can sell this stock to at that specific price. So worst case scenario, you have the exercise on your side, but at least every time since I've been in the business, you have the opportunity to sell the put for nearly the entire price of what you'd be able to do the exercise for anyway. So it's a good thing if it goes belly up for the sake of making money on that put.
Yeah, you are in luck. Greg, I'm sure you've gotten this question many times in your tenure over there at Fidelity, maybe even before that at Schwab. Anything you want to add here for our friend, the mouthful EJH4IZU?
No, I think, Mike, you hit it all. I mean, we have a pretty good idea when stocks are headed that direction. If you don't want to have to wait, obviously you can sell, like Mike was saying. But I think the most important thing is to smile. I think you've done a good job of you're picking the right one. So not a whole lot to add. I think it was pretty well covered.
Mark, you were mentioning before about the Disney crushing due to their streaming service. This is a similar vein, not your country, writing in a little bit off topic, but it's kind of fun. He heard us talking about Netflix on a recent show. He says, what's the probability that Netflix won't file for Chapter 11? And what was cool about it is he included this fun little infographic, which you have to actually scroll to see all of it. We'll include it in the show notes. It lists all of the competing services out there for your streaming dollar. I don't think it even has the Disney one. So maybe you can add the Disney problems. You got Netflix, Amazon, Hulu, and then it goes down from there. HBO Now, CBS, All Access hasn't even launched yet. WWF Network, YouTube Red, etc., so on and so forth. So yeah, there are a lot of players in that space right now, though. They are Netflix got a little bit of first mover advantage on pretty much all of them. Only a handful of those, maybe the Amazon, and maybe to a lesser degree Hulu and a few others really legit contenders. HBO, obviously, popular Game of Thrones time. Maybe not so much the rest of the year. But yeah, interesting point. You can look at those out of the money puts and get some of your own probability analysis going from there. They're not trading for a ton, so that should give you some example. We got time, I think, for one more. This kind of goes to what we were talking about at the top of the show here with the numbers. This is a similar vein. This comes from CLT. He or perhaps she wants to know, I heard a rumor that minis were making a comeback. Any truth to it? This is a fun one, an interesting one, because I had an interesting thought actually when I was doing back at the Options Industry Conference again, and we were talking. A lot of people seem to bring this up to me all of a sudden. A lot of heads of the exchanges saying, oh, we wish there were minis around now because names like Amazon and Google were getting way too pricey and a mini would be great. And they brought it up apropos of nothing because I had pretty much stopped asking about those because they're a dead product. But apropos of nothing, multiple people brought it up to me. It doesn't mean I think they're coming back. I think they're dead, but still kind of interesting. I don't know, Greg, you were down at the conference as well. Was that your experience as well? Did you hear a lot more perhaps mini talk than you thought? And do you have any secret nuggets, any secret rumors about minis to share here with our friend at CLT? Is Fidelity leading the charge to bring them back?
Well, I can say that at that industry at the options industry conference, there was a lot of things thrown around. Minis may have been one of them. I mean, there were just a lot of ideas, but I think that you're probably closer to to the truth when we're talking that. I don't think there's much of an appetite from the exchange standpoint to bring these back. I made a few phone calls on this and just asked a couple of folks who are a little closer to maybe some of the product, side of the exchanges, and none of them had heard any rumors about, the minis, coming back. But not to say they won't, and maybe somebody can lead the charge for that. But I think that, at least at this point, we're not close.
Look at Greg doing some homework. See that? CLT, ask and you shall receive. Greg doing some legwork for you. And you're right. If there was a rumor out there, it probably would have come across our network at some point or other, and we haven't heard anything. Yeah, these things are pretty much dead. They were a spectacular failure. That never helps. Really quickly, Mr. Meatball, you want to do this question? I'll let you have one more because it's fun. It's Mail Block Thursday now. Bullseyes, whatever you pronounce it, says he wants to know, are options worth it for day traders or just for swing traders? I imagine you got an axe to grind this one, Mr. Meatball. What say you?
They're, of course, good for day traders. I day traded options today. When Goldman was getting murdered, I said, you know what? It's about done getting murdered. And guess what? With all these weekly options, I can buy a ton of gamma for next to nothing. So you know what I did? I bought the 215 calls expiring today for $1.49. And guess what? They were worth $2.10 a few minutes later. And I was very happy about that. What I don't get is, why would anyone who day trades ever use stock? That's my question. You get so much more leverage. They're so much more effective. They actually can cost you less. You're not going to eat. You buy an option for $1.50. You buy a 10 lot. You spend what? What is that? $1,500. You buy 1,000 shares of Google or of Goldman Sachs, right? You're getting similar exposure, or let's say 500. Let's say we buy 50 Delta calls. You buy 500 shares of Goldman Sachs, and it drops $2. You're out $1,000. $3, you're out $1,500. Guess what? On your calls that expire tomorrow, they'll still be worth 40, 50 cents as opposed to the $1.50 purchase price. So it is. I've never understood why anyone would do anything as a day trader. Why anybody would do anything other than trade options as a day trader, except for ignorance, stupidity, or both.
Oh, the Meatball coming out swinging on behalf of swing traders. I can see an argument for those scalpers and like some of the Delta One stuff. I like the scalp tick by tick kind of thing. But that said, we're coming up against it here in the mail block. Uncle Mike or Greg, anything to add here for Mr. Bullseyes? Wants to know, day trading or swing trading? You agree with the Meatball, or are you on the other side of the fence?
I'm not standing in front of that train.
Greg, anything to add?
Yeah, I'm kind of there as well. I think that they're a good product to do a number of things with. So we'll leave it at that.
The show is called the Option Block for a reason. So surprise, surprise, we come in on the option versus the Delta One side of the fence. All right, we got to keep on rolling. Time for our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. A lot percolating out there. Missiles over there in Asian nations. We got that aforementioned hurricane cannon pointed directly at the southeastern United States. A lot of things to watch. Perhaps, Uncle Mike, we'll start with you. What's on your radar for the rest of the week, sir?
Everything that we talked about today in terms of the macro.
Yeah, Mike,
weather.
is your radar Doppler? Just wondering.
Good point. Yeah, it's definitely watching the Doppler, watching everything. And then we have this thing called the NFL. It kicks off tonight, watching that on a totally unrelated note as well. But, yeah, we have a lot going on right now, everything in the news with that we talked about.
I don't know what this niffle is that you speak of, so I'll have to research it after the show. Mr. Meatball, same question for you. What's on your radar here for the rest of the week into the weekend?
Well, the Bears are getting 8.5, and I would take the other side of that. I would take the Falcons. Falcons minus points.
Alienating all of our Chicago listeners. There you go.
Yeah, and I'll toss this one to Mike. So last I checked, I think the Patriots are laying 7.5 to the Kansas City Chiefs, who won their division last year. What do you think? Would you buy or sell the? Which side of the spread do you like?
I don't bet against Tom Brady on prime time. I'm going with the Patriots, regardless.
You'll take the Patriots and the points. The other thing I'm watching is North Korea. So allegedly there is an ICBM launch on the 9th. Will that happen? The Chinese are getting extremely frustrated with the North Koreans. They continue to back stronger and stronger sanctions against themselves, against their what they'd actually prefer to do. So watch the weekend for a intercontinental ballistic missile launch, and careful if that gets near Guam, because that could lead to something. But I'll tell you, tomorrow, for those listening live, tomorrow I would buy the dip, and I would be a strong S&P futures buyer.
Yeah, we got some quite literal weekend risk this week. We have potential missiles and, of course, hurricanes bearing down. So if you're looking for actual weekend risk, perhaps a reason to keep a few puts in your back pocket, this weekend may be one of those. Last but not least, Greg, bring us home. What's on your radar, literally and figuratively, for the rest of this week into the weekend?
Yeah, I think the guys covered it from a trading perspective. More importantly, I'm on versus hurricane or missile watch. I'm on Andrew Luck watch, hoping that the Colts actually can field a team and be competitive while he's sitting on the sidelines, sipping some margaritas possibly.
Wow, Colts! Don't get a lot of Colts love here on the old show, but Uncle Mike's a Bills fan, so there's no accounting for taste at the end of the day. All right, that music means we're done here on the old option block. It was a fun one this week. See, we only came in once this week, but we brought you some goodness to fill this hour on your commute or whatever it is you're doing. But before we go one last time around the horn, see what's cooking with each of our cohorts here on the old All-Star panel. Let's start with you, Greg. You're our guest. You get pride of place here. If listeners are listening to the show and they're scratching their chin saying, Fidelity and options, those are two interesting things, and they want to learn more. Where should they go? What should they do?
Yeah, as far as that goes, we have a pretty good offering, and I invite everyone on the call to stop by Fidelity.com. Give us a call at 1-800-FIDELITY, I believe it is. I got to think about that number. But we have the trading platforms, the information, the tools that can help service. We have a great set of brokers out there to help you walk through the trades and answer any questions you have. And guys, I enjoyed this. I appreciate the opportunity to come on and speak to everyone, and looking forward to some follow-ups.
Fidelity bringing it strong in the options space these days, and Greg and I have talked. He really wants to improve their showing in our annual options March Broker Madness tournaments. So they're doing their darndest over there. Check them out, Fidelity.com. You know where to go to learn more. And Mr. Meatball, what is cooking in the land of Carmen Line as we prepare for missiles and hurricanes?
Well, Carmen Line's going great, but I want to talk about the fact that how would you like to meet me and Mike Tusaw and Mark Longo live in Chicago on September 20th?
I would like to do that. How can I do that?
Why wouldn't you? Oh, and Matt Tubby Benson. Why wouldn't you?
Now I'm out. You just lost me.
You're right. And then go out for drinks afterwards. Oh, wait. And do mock trading the night before. Why wouldn't you want to do that? The answer is you should want to do that. We have our professional traders summit. Mark and Mike and Matt. Basically, three of the four books of the Bible will be there discussing options. The options Bible, of course. And come out and get yourself signed up. The link to sign up will be in the show notes. It's $297, and through this Saturday, if you buy one ticket, you can bring a guest for free. So Why wouldn't you want to do that?
Ooh, BOGO. I like that. The Options Bible. Maybe we should rename the show. Oh, too late. We're 600 episodes deep. That's a good name. Good idea for a future show. I got one in the back pocket now. Thank you for that, sir. Register. It'll be in the show notes. We'll tweet it out. You can go to Mark's site and to do it as well. Optionpit.com to learn more. Get your seat. See Uncle Mike in person. It's a rare opportunity. He never leaves St. Charles. And last but not least, the aforementioned Uncle Mike. Sir, what is cooking in the land of going long and RCM Wealth Advisors and all the other things you got going on?
All sorts of stuff. Yeah, if you definitely are interested in buying my book on Amazon, the Kindle edition, just go to Kindle and type in Go Long, New Option Strategies for Buy and Hold Investors, and pretty much everything with which I stand for and believe and talk about on the show is outlined in the book, and it costs less than a Starbucks, quite honestly. It's a pretty good deal. Check it out.
There you go. Check it out. Going Long, M. Tusaw, just Mike Tusaw, T-O-S-A-W on Amazon. Less than the price of a Starbucks. Get all that good going long knowledge. If you go short, don't buy it. It'll offend you. Only buy it if you're permeable, like Uncle Mike. I'm kidding. Go check it out. It's good stuff. We kept you late today, but you know what? We had a lot of fun. Hope you did too, and we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.